Get up, bitches. Get up. It's a great day.
This is awesome. So this is the first show, my first official show on Crypto Banter. I'm sure a lot of you have been following my content if you were following me before, or of course the Banter fam. Obviously, I've come on the show a few times, but now this is the official launch of the new DeFi show. So I'm super excited. These shows are going to be covering everything DeFi, yield farming opportunities, token analysis, pretty much everything to help you succeed in this market. So I'm super excited to be coming on and joining the Banter fam.
Amazing. So listen, if you guys are new to our channel or are new to the show, this is the first of a daily show that we are launching. The show is going to be at 1 a.m. EST, which is right now. That way we've got the Australians, we've got the Europeans. And for those who want to stay up in the United States, well, that's, this is your late night show. So if you are new, subscribe to our channel, like this content. That's what tells people that we're here. And this is a brand new show, so not everyone knows that we're here yet. It's going to take us a few days to let everybody know. What I can promise you, though, is that I can promise you three things. One is that these shows are going to be fun and simple. So it's going to be fun and simple and a cool way for you guys to learn about DeFi. Two is I promise you that we are the hardest working team in crypto. There is no team in the world that works so hard to bring you 4 shows every single day now. DeFi in the mornings, charting in a few hours, fundamentals, and then gaming. And if you guys didn't watch Hustle's show last night, it was one of his biggest shows. Holy moly, was that a good show? It was insane. Yeah. Every time I listen to Aslam, I just keep reaffirming my suspicion that guy is the best guy in gaming in the world. He is just the ultimate. Yeah. So here it is. If you missed it, this is the one you want to be watching. It's called the Ultimate Gaming Portfolio. This is the one that you want to be watching. This one is absolutely. I listened to it twice. I listened to it twice. So just go and do it. Go and listen to it. And then
I need to watch it again.
Yeah,
I need to watch it again on double speed. Just get through it over and over and over. Just ram in those top 10 coins, guys, because they're serious ones to watch.
Yeah, 100%. All right, Miles, what's on our agenda for today? What are we talking about today?
We got a massive agenda today. So as you guys know, I kind of originated covering Fantom, and that's kind of how I kind of grew my Twitter to begin with. So we're going to go back to my roots for the very first show, cover Fantom, the fundamentals of why I think it's a great project, and give you guys some updates because it's been a little while since I've covered it on Banter in depth. So give you guys an update on what is happening in the Fantom ecosystem. And then once we've affirmed that it is a solid project and that it's undervalued, we can look into how to maximize gains in the Fantom ecosystem with 2 top ecosystem coins and 2 top ecosystem farming plays that I'll be showing you in the second half of the video. So we got a jam-packed show. I think we should get straight into it because there's a lot to go through.
There are so many ways to make money in Fantom. It's the most, I would say it's like the most fun ecosystem. If you want to be degening, DeFiing, then Fantom is like the most fun ecosystem, especially now where you've got like Tomb, and then you got 2 ARM, and then you got 3 ARM and 2 shares and 3 shares. And then you got like Beethoven, and you got Spirit Swap, and you got all these different LP and staking things. You can literally spend every day, all day, just jumping and making yield to yield on Fantom. That's like a full-time job, and that's what people don't actually realize. There is so much going on Fantom. That is your job.
Wake up in the morning, deploy some LPs, reinvest some rewards. It is a full-time job. I don't even know how I have time for these shows now with all the stuff going on in the Fantom ecosystem, but it's absolutely insane, and it's kind of being branded as kind of the community DeFi chain. So that's why it's really solidified its roots in DeFi, and it's giving up so many opportunities in that area. And I would just say, just to start the video before we get into the Fantom fundamentals, is that my best advice, and the one thing that I preach, is getting your hands dirty. Get your hands dirty in DeFi, experience it for yourself. Because the way I learned was just getting involved with the communities, getting in the Discords, the Twitter, and just getting really, really active and experimenting. Because at the end of the day, the best way to learn is by doing. So if you're sitting on the fence, just get in with a small amount, whether it's $100, whatever you can afford, just have a little play around. Fantom's a cheap chain, low gas fees, and that's the best way you can possibly learn in DeFi.
So let's talk about that, because people think that DeFi is like inaccessible to them. And in the past, DeFi has been a little bit inaccessible because gas fees were so high that unless you were coming in with serious money, it just wasn't worth it. But Fantom is a unique case. And the reason why it's a unique case is because Fantom is an EVM compatible chain. So it is a chain that works on the Ethereum virtual machine, which means that migrating Ethereum-based applications or code is actually not that difficult. Second thing about Fantom is it's super fast, and it can handle big loads and keep transaction speeds and fees very, very low. So you're getting high speed, low fees on EVM compatible chains. The third thing that's super exciting about Fantom is the fact that Andre Cronje, who is in my mind probably the smartest DeFi mind in the world. I think he was one of the inventors of DeFi. He was the one who wrote Fantom. He was the CTO of Fantom. He created Fantom. He was on the founding team of Fantom, and he was one of the creators of Fantom. So what you've got is you've got this chain that's super fast, super cheap, can handle load, and then you've got a builder on the other side who's inspiring and building multiple crypto DeFi applications, which has almost made this like a DeFi playground. So for me, Fantom is a DeFi playground. That's what it is. It's a playground. Anyone can play because it's so cheap. There's no minimum entry ticket because you can unstake and stake for less than $1. It's just so cheap. And that's what makes Fantom completely unique.
Exactly, and if you know a little bit about Andre, he started Yearn, Keeper over on Ethereum, and obviously he has the new project SolidSwap, which we'll be going into in a minute, which is created just a huge DeFi kind of revival, a huge DeFi rally within the Fantom ecosystem, and we saw the TVL kind of explode off the back of that. So if just talk about that for a little bit, if I could get my screen up. We see, still, so what happened, I'll just go back to the basics for a second, is Andre announced the new AMM SolidSwap. So he was going to be coming out with a new project in collaboration with Daniela, which is pretty much kind of taking the best parts of Curve, the best parts of the Olympus DAO forks, and kind of putting them together to create this new AMM. And we saw a huge spike in the Fantom TVL over the last month, plus 62% increase, as people were putting funds into the Fantom ecosystem to take advantage of some of the incentives that were being offered to stake. Because if you didn't know, the only way to receive these new tokens, or NFTs as they were distributed to the protocols, is to be invested in the top 20 protocols of Fantom. So we saw a lot of people coming into the ecosystem, depositing funds in order to qualify for this snapshot. So that's a major reason why we saw a plus 62% increase in Fantom TVL over the last month. And if we look at what actually happened, is we peaked at $14 billion. That's insane. It was, I think, the third ranked chain at one point for TVL. So the liquidity incentives for this new project was super high. We have seen a little bit of a pullback since then, pullback to around the $10 billion range. But that's actually really bullish for me, because we want to get the people kind of out of the ecosystem that were just in there, for the short term. And we want people staying in the ecosystem, staying locked in, that are in there and actually believe in this project. So it's bullish to me that we've been able to keep a $10 billion market cap despite having a 30% pullback in TVL, because we see we're at 5 billion before Andre announced this project, and it basically tripled. TVL tripled and then had a slight pullback, and I'm expecting some big things from this project. It's super exciting. So I think we should just break it down a little bit more to help people understand, what this project is, because that would help kind of paint a picture of how we can take advantage.
So Andre was a genius. When I say, he is a genius. And the reason why he is a genius, the way that he distributed the tokens, you couldn't buy them. There was no pre-sale. There was no team allocation. There was no advisor allocation. The only way, the only way to get the tokens is to lock them up in other Fantom protocols. And he distributed it. He distributed the entire project allocation across the protocols. The one loophole is that the protocols, or most of the protocols, have not yet announced how they are going to distribute the tokens that were given to them. And that's quite a concern. And that is quite a concern. You saw, if you go back to your DeFi Llama chart, what you saw is the TVL going up as everybody locked up their tokens. But then it came down, but it didn't come down to the pre levels, which means that Andre got people addicted to the Fantom DeFi game. That's one of them. And B is that people are saying, hang on, I put money in. The money's making money. So I've now learned that I can make so much money on my Fantom. I may as well just leave it here. And that's exactly what happened, which was genius.
And think about it this way, it's a net positive overall, because even if you get a huge increase in TVL and some people exit the ecosystem, it's still a net positive because the majority of that liquidity is staying in the ecosystem. So I think we saw a scenario where a lot of people were exposed to Fantom that wouldn't normally be exposed. A lot of whales set up wallets on Fantom that normally wouldn't have. And that's really bullish overall because you can kind of accelerate the network effect. So accelerate the number of participants in the network, even if we're going to have a slight decline in TVL. So overall, it was a net positive, and that's, really just shows the power of community building and what Andre was able to do with kind of the hype behind this project. I mean, it's absolutely insane.
All right, should we talk about Andre's project? Should we talk about Solidly, or should we talk about all the other stuff?
Let's talk about Solidly just quickly, because I know a lot of people are kind of have a few questions over what it is. Even I have a few questions over what it is, but pretty much this is the easiest way that I explain it to people. It's taking the Curve model, so with vote escrow tokens, being able to lock them up for a longer period of time to receive more rewards. So pretty much it incentivizes staking. So the vote escrow mechanics incentivize staking, and then the VE33 is the Olympus DAO. The 3.3 part of VE33 is the Olympus DAO model, which is pretty much this game theory rebase model down here of where if the more participants that stake, the better it is for all the participants of the protocol. So it's combining the best elements of Curve, combining the elements of Olympus DAO to kind of create a more sustainable protocol compared to some of the other kind of ohm forks and things that we've seen.
Okay, just slow down for some of the viewers that may not be as technical as others. So what is Solidly? I mean, I understand that it's got elements of Curve and elements of Olympus DAO, but Solidly at its core is what?
It's it's a protocol to protocol automated market maker. So you'll be able to swap. So it'll be a DEX. And it'll also have pools where you're able to stake tokens and earn rewards. So it's going to be like a lot of other AMMs, but all they're doing is they're adding in this extra kind of mechanism to enable you to earn more yield based on how long you lock up for. So it's like a normal AMM. It'll have a DEX function, but it will also incentivize you to come over and lock up your VROC tokens, which is kind of a really good thing on the tokenomic side of things, to kind of add to its base functionality.
So it is kind of like a normal AMM. It is kind of like a Uniswap or a SushiSwap, which is an automated market maker DEX exchange, decentralized exchange. The only difference here is that he's calling this a protocol to protocol automated market maker, and not a peer-to-peer automated market maker. Which what they allude to here is that in the future of everything happening automatically, Internet of Things and everything else happening automatically, you're going to need protocols to be able to talk to protocols and to be able to exchange tokens with protocols. Now, whereas Uniswap and SushiSwap right now are much more consumer facing, what he anticipates that this is going to be is it's going to be a protocol to protocol. It's going to be like two protocols trying to talk to each other. That's what it's going to be. Okay, now he says when you talk about Curve, so let's just quickly go through what you mean by it has the same features as Curve and the same features as Olympus DAO.
So Curve has this thing called vote escrow tokens. So pretty much if you know Curve, the token behind the Curve Finance protocol is the CRV token. So it's a liquid token where you can actually lock it up. And when you lock up, you get voting rights. So you get voting rights to be able to boost certain pools on Curve. So we saw this phenomenon, the Curve Wars, because people were buying up these tokens in order to get more governance to boost their own pools. So it has the Curve vote locking function where you'll be able to take, I think they're called VROC tokens, and lock them up, and you'll be able to buy up governance to be able to vote and get your own voting rights, essentially. So it's kind of adding that extra bit of complexity in by taking the convex kind of model, the Curve convex model, and putting it into a new package, which is really cool because we haven't really seen this happen before. We haven't seen the Olympus DAO and the Curve mechanics kind of in one.
Yeah, so to simplify it, for those of you who are not as technical as the rest, It is an AMM. It is like a DEX. It's like a Uniswap, but it has two added features. It has a game theory in terms of votes, which is the one token, and then it has a DAO token, which is what I think they call the DAO token 3.3, right? Or what's the official name for the DAO token?
I've heard it be referred to as VROC. I've also heard a lot of people saying V33. So we'll see.
Yeah. All right, so that is Andre Cronje's new project. The tokens he has already airdropped to the top 20 protocols. And very interestingly, very, very, very interestingly, I think it was because of you, Miles, that even after Andre Cronje took a snapshot of the top 20 protocols, Miles popped out a tweet that basically said to Andre, hey, Andre, you've left out two really important protocols in the ecosystem. What were those two?
They were LiquidDriver and Tarot, I'm pretty sure. Because there was obviously a lot of complaints from the community, like, okay, it's kind of unfair that these new projects can kind of just come up from the ground and attract all this TVL through insane incentives, and then genuine projects that are like the pillars of the Fantom ecosystem, like LiquidDriver, were kind of outside the top 20, which just doesn't make sense, right? It's not actually rewarding the best projects on Fantom. So obviously Andre saw that a lot of the community was upset, and I did a tweet, and I even came on the show and talked about it. So we got a little bit of attention, and clearly he saw, and then decided to, okay, fair enough, I'll increase it from top 20 to top 25. So we were rewarded in the end, luckily. And that's just the power of the community, and I'm really glad that he listened to the community on that one.
Insane. All right, let's carry on with the show. Just as an aside, I'm sitting here watching the Fantom Tomb. This Fantom Tomb Peg is doing crazy things. It's now at 0.95. It was at 1.01 a second ago, and it started the morning at 0.92. So for those of you who are trading Fantom Tomb, there's a lot to talk about now with Tomb and 2 ohm and 3 ohm. We should talk about that at some point.
Yeah, at the end, I'm going to address that briefly. I actually want to do a proper dedicated kind of segment to it. Obviously, I'm going to be streaming every single day now, so I'll be able to cover things in more depth. This video probably won't have time to cover that in depth, but I will do that later in the week, and I'll kind of dive into what actually happened. So stay tuned for that. But yeah, there's been a lot of drama with the 2 ohm, 3 ohm stuff, and yeah, it's been pretty crazy. But I wouldn't be recommending purchasing any of the 2 ohm shares right now if you're thinking of aping in.
I mean, it's just, if you go quickly onto your chart, if you quickly call up the 3 shares chart, just look at what happened to 3 shares in the last 10 seconds. Let me try and find it for us on
Is CoinGecko showing this accurately, or?
No, it's not. I think Spooky Swap.
3 shares. Wrapped Fantom. Spooky.
Maybe Spooky will show it, but there's been a massive red candle. It's just gone down 25% in 1 second, and that's because it went up so quickly.
I'm not sure how accurate this chart is.
Yeah. Okay. You go on with the show. I'll find us a chart in the meantime.
Sure. So I guess I just want to briefly say, like, if you don't know much about me, if you haven't heard much about me before, Fantom actually did a spotlight on me a few days ago. So if you want to go check that out, it's on the Fantom blog, and it goes into my investing background. Once again, I don't want to go too in depth here, but I think it'd be interesting for you guys just to know a little bit more about me. Just to summarize it really quickly, I got into Bitcoin late 2018, and I purchased my first Bitcoin purchase in 2019, kind of rode that into 2020, and then got really, really deep into DeFi in 2020, 2021 in particular. So that's just a bit of background on my history. Once again, this article is on the Fantom blog. Go check that out if you want to know more about myself. In terms of the Fantom price right now, because there's 2 elements to this. The first thing we have to verify is what's the health of the Fantom chain itself, and then what are the best opportunities to take advantage of Fantom. So just to address the first thing, I'm looking at the price here, and the price action is really, really positive. So we're up off the lows, 31% here, so a very strong bounce, pretty in line with what Bitcoin did, and off the very, very lows here, we are up 100%. So we've basically doubled. So we're sitting in a pretty good spot. With the amount of hype for Fantom, some people were disappointed that we weren't able to break highs. As you can see here, we attempted the high, we didn't get it, and we pulled back a further 40%. But I like where we're sitting. We've kind of been ranging in this 2 to 230 range. This has actually been a range where traders have had a little bit of success profiting in. So I'm more of an investor. I've been DCAing around the $2 mark. Whenever we have a nice dip, I like to stock up on my Fantom. But I just want to kind of paint the picture here that it's looking pretty healthy. We've had a really, really strong rally to the upside with Bitcoin, 23%. So check that box. Charts are looking healthy. I think we can push up and make a new high if the market really gathers some steam, because Fantom is one of those protocols that is super, super strong compared to the rest of the market. We've seen strong relative strength over time. So we're just kind of verifying on the charts that strength can actually reflect into positive price action. Tweak did a really good kind of cycle tweet on the Fantom price, because we obviously want to verify that it's possible that we can push for these highs. And we've seen Fantom kind of go in these waves. So we saw this first wave here where Fantom went from just a few cents and we kind of went up to 2-3 cents in this range. So we saw that first cycle. This is just using the fib lines as well. Second cycle, we saw a push up to almost $1. And now we're kind of in this third wave. We've seen Fantom move in waves, which is super interesting. And we've pushed up kind of to this 220 range. Whether we can push up and actually test this $10 to $18 range obviously is going to depend on the Bitcoin price. But I guess what I'm saying is there's scope for growth here. With Fantom at such a low market cap relative to other blockchains, if we go on, I think it's rank 30. It's only got a market cap of around 5 billion, 6 billion now, which is really, really low compared to other chains. So it's not unconceivable that eventually we can get a major, major push up into the end of this cycle C. So we can tick that box with the price as well. It's got that growth potential. And the major, major thing that I'm always pointing out, and it doesn't seem to be changing, but it's giving us a big opportunity, is this TVL ratio. It's still nuts that Fantom's sitting at a 0.56 market cap to TVL ratio compared to other protocols. So the market cap TVL ratio is the overall market cap of Fantom divided by the total value locked in the Fantom ecosystem, and it kind of represents, relative to how much is locked in the ecosystem, what the Fantom chain is valued at. And we see, if we look at AVAX, it's got triple the market cap to TVL, which is a really interesting consideration. Solana, obviously,
let's
is
just
8x.
Let's just ask why the market is doing that, because the market shouldn't allow for these big gaps happening for so long. So the reason why, if you look at AVAX or you look at Solana and you look at the ratio of market cap to TVL, they get a much higher number in terms of market cap to TVL, is because the market is penalizing Fantom for two things. The first thing it's penalizing Fantom for is they're saying, look, we don't think that the technology behind Fantom is as impressive as the technology behind AVAX or Solana, because Fantom is not actually a blockchain. It's actually a DAG protocol. It's directed acyclic graph protocol, which is, for some reason, investors aren't willing to give it as much of a valuation. The second thing is, what investors are saying is, on Solana and on AVAX, there are many other projects that are not DeFi related. So NFTs, et cetera, et cetera. And Fantom, the market's saying, look, this is a DeFi protocol, so we can only give you a valuation for the DeFi that's locked in here. And that's why right now it feels like Fantom has got a much lower market cap to TVL ratio, because the market's only giving it credit for its DeFi protocols. It's not looking forward to any of the other protocols.
Yeah, 100%. I think that's a major issue, the centralization. And, I'm not shying away from that, because it's certainly something I have to address with only, I think, 52 validators at the moment. So definitely a big thing they've got to address. I know the team is working on it. It's a long process. Fantom started in 2018. It wasn't feasible with the technology constraints to be able to roll out a bunch of validators, right? It would increase they need better scaling solutions, pretty much, better storage solutions to be able to kind of roll out those changes. But definitely that's one of the constraints. Next big constraint is accessibility. I was trying to get one of my friends onto Fantom the other day, and we found it very, very difficult to just buy it on a normal exchange. I'm in Australia, and I know in the US it's a lot more difficult because it doesn't have the Coinbase listing. It doesn't have a lot of mainnet support on exchanges. So if you know KuCoin, it was very hard to withdraw Fantom for a long period of time. And the ecosystem coins don't have great exposure on major exchanges either. So accessibility, I think, is still a major major constraint as to why people just can't get their hands on it. Even people that want to buy Fantom struggle to get their hands on it, which is obviously a major factor.
Miles, that's the big opportunity.
Exactly.
That is the big opportunity. If it were freely available, everyone would be aping and the price would go up. If you spend half an hour, 45 minutes learning how to use Spooky Swap, learning how to use bridges, learning how to use whatever other exchanges you want to use on the Fantom ecosystem, then that is where you're going to get your alpha, because you buy the tokens now, the ones that you believe in, you chill. When they start getting listed on big exchanges like Binance, like Coinbase, you make 5x your money. Then you make 5x your money. After that, you change your wife. That's the first thing you do. Then the next thing you do is you change your car. And that's pretty much the formula. I mean, it's such a simple formula.
A very, very simple formula. And I think you've showed us quite a few times how to find out that formula. It's simple as this. CoinGecko, search up a project, let's say Spirit Swap, go into the markets tab and actually look where we're listed. Something like Spirit, it's a major DEX on Fantom. It only really has the gate. I mean, it doesn't have the major listings. No Coinbase, no Kraken, no KuCoin. So that's a really, really simple way to be able to look at where the opportunities are with these ecosystem tokens. I would say a major thing is also Felix. I know Harry's been working on this for a while. I said it was coming out in December and it didn't. It got delayed. But that is looking like it's getting a March release. So if it does come out in March, I think that could be positive as well. Getting the access to some of these ecosystem tokens on the Binance Cloud centralized exchange, I think is super bullish. And I would say, yeah, it is probably factored into a lot of the price now because we've known about Felix for a while. But I think what people aren't factoring in is the extent of liquidity we're going to get access to in terms of these ecosystem tokens. So I think we'll actually see a bigger push up with the ecosystem coins than we will Fantom itself from something like Felix. So that is kind of why, and I guess it's a good segue now. That's kind of why I'm looking at some of the ecosystem plays as being the more advantageous plays if we go bull again. And that is where the real gains are to be made.
I think the other thing that we need to talk about is the elephant in the room, which is what Alejandro is saying. Fantom coming to Coinbase soon. It doesn't make sense that Fantom is not going to be on Coinbase and not going to be on Coinbase like pretty soon. And when I say to you pretty soon, like now. The reason why it doesn't make sense is because Grayscale is contemplating or has added Fantom as one of its trusts. So Grayscale, the Grayscale trusts are the ones that buy the specific asset and allow US investors to invest in them by buying shares in the trust. Now, Grayscale's biggest trading partner and custodian partner is Coinbase. They execute the majority of their trades through Coinbase. Right now, if they were to start a Fantom trust, and they've said they want to start a Fantom trust, they would need to be able to buy it. Where do you buy it? Easy. Coinbase. How do you buy it on Coinbase if it's not listed? Easy. It's going to get listed on Coinbase. It is, in my mind, I know we've heard this many times before, but there is no reason in the world whatsoever that Coinbase shouldn't list Fantom. Fantom is in the top coins. It has a very lively community. It is decentralized. The token is by no means a security. It's a utility token. There's precedent against that. They have a very, very, very big community, which means that if Coinbase does do that, they're going to get the community to start trading Fantom. It's a matter of time. Now, when they list Fantom, they open up the doors to all the Fantom ecosystem coins, because once you list the first token in the chain, that once you list the native Fantom, then to list the spooky swaps and the popsicles and all the other ones that are native on the Fantom chain, it's copy paste. The first one is difficult because you have to integrate with the blockchain or the DAG. You have to check security. You have to check the smart contracts. You have to integrate with the wallets. But then once you've done the first one, it's plug and play. And so you have to, right now, the best thing that you can do is buy tokens in the Fantom ecosystem, and then just chill until Fantom gets listed on Coinbase. Could be a month, could be 2 months, could be 3 months, but it's going to happen. It's going to happen. I just want to show you, Miles, I'm watching on my other screen. Bang, the Fantom Tomb Peg is now at 1.02. this thing has gone absolutely crazy. I mean, and this thing is jumping around absolutely crazy. It's a matter of time, I think, before the T-shares price goes up.
Yeah, it looks hugely oversold to me.
Yeah,
just
it's crazy.
Based on experience, whenever T-share has crashed due to a bit of FUD, it has rebounded pretty strongly.
Look at that, 1.04.
That's just been the pattern with T-share. So yeah, I wouldn't be too concerned about the Tomb Peg. I think Harry's shown is that the peg, it's got enough backing to be able to maintain that long term. But as I said again, I'll be covering a lot more Tomb stuff later in the week because there's a lot to talk about there. But I just want to kind of go into what you were saying about the ecosystem and kind of look at some of these ecosystem projects, because you're right. The more that Fantom gets exposure on these big exchanges, the easier it is for some of these ecosystem coins to be launched. And this is just a little watch list that I'm looking at. It's not every Fantom project, but we see some of the major projects here. They've actually responded pretty damn well. Beethoven up 49% this week. Protify, one that I actually covered on the website a week ago, has gone up 229%. So absolutely crazy. Some of these kind of gains in this ecosystem. But these are definitely the plays you want to be looking at. Something like a Popsicle even that has been really smashed in the midst of adversity could be factoring into a lot of this solidly.
Can we talk about Popsicle for a second? So Popsicle is the Daniel Sester exchange. Fantom, it's the Daniel Sester exchange on Fantom, right? Is that a good description?
Yeah, it's not. I don't think staking is native on Fantom. It was built on Ethereum, but it is cross-chain. So
yeah,
it's it's a pretty complicated. It's a yield optimizer. It's a yield optimizer.
It's the one that Daniel Sester and from MIM and from Wonderland and from Time. It's the one that he created, right? He was the mastermind behind it, right?
Yeah.
Okay.
Yeah.
That price got completely knocked in the when there was a whole debacle around 0x Sifu and the Time Wonderland debacle, and that hasn't responded.
No, it hasn't really responded because we haven't really gotten much, obviously, word from the project itself on what is happening going forward. I have an inkling that the plans haven't changed. Andre had huge backing for Popsicle Finance, and he wanted to integrate solidly with Popsicle through pools and some cross-chain liquidity incentives. So I think that we're going to see a pretty good response from Popsicle at some point. I don't know when. And I had a tweet. I probably won't be able to find it now, but Popsicle is planning on launching a derivatives exchange at the end of the year. Kind of Daniela's vision for Popsicle was to have kind of a one-stop shop for derivatives, trading, leverage trading, yield farming, optimization, like basically the ultimate DeFi protocol. Whether that vision can actually be realized, who knows? Obviously, his reputation's taken a hit, so his projects take a hit, regardless of their fundamentals. So this is one that I am looking at pretty heavily because I don't think this is a great short-term play because there's so much to play out. But long-term, whenever you're DCAing into a project, when it's significantly down, if you believe in the fundamentals, it's probably a very, very good play long-term. So that's definitely one I'm looking at. And I want to get into the strategy now because you're probably wondering, well, how do I actually earn yield? How can I stack ICE, for example, without even having to own the tokens up front? And I've got a really good strategy for that I've been using. And it all revolves around LiquidDriver.
Okay, let's do it.
Let's get into it. So this is kind of my ultimate LiquidDriver Beethoven strategy that I personally use because I absolutely love what LiquidDriver is. So let's kind of break down what LiquidDriver is in a simple fashion. So they're pretty much a governance token hunter. So they are the convex of the Fantom ecosystem. So they go out, they buy governance on other protocols to boost their own pools. So we've actually seen them with Spirit Swap, just to kind of break it down a little bit further so you understand what the protocol is. They are basically a yield hunter. So they have pools that you can deposit into, farms, LP farms, that you can come in, deposit, and earn really nice APRs. How they're able to offer these APRs is through their governance hunting approach. So they go out, they buy up in Spirit to acquire voting rights on Spirit Swap, on Beethoven, and we've seen them do it on 100 Finance as well. So they've got their kind of eggs in multiple baskets now. So they go out and they buy governance on Spirit Swap. And what this enables them to do is the more weighting they have of governance, the more they're able to boost their own pools to pay higher rewards to their stakers. So it's a pretty genius system because, kind of like Convex did with Curve, the more voting power they're able to accrue, the more the stakers of LQDR tokens can earn. So it's a really, really genius system. And we saw 30% of the Spirit voting weight is actually weighted towards LQDR now. So they're boosting their own pools through InSpirit, which is super, super cool. The issue is the only way to receive the rewards from XLQDR is to stake XLQDR tokens. You receive 105% per year, but you have to lock it up. The only way to get 105% is to lock up your tokens for 2 years. Now, this is quite a long time to be locking up your tokens for. So if you want exposure to LQDR, there's an even better system that has now come into play, and that is the Pirate Party. So Beethoven actually said, okay, we understand people don't really want to lock up LQDR tokens for a long period of time. Let's create a pool which enables us to have exposure to LQDR, but be able to freely trade the token. And this is the strategy that I'm using to generate LQDR rewards off LQDR. So I maintain exposure to the token and I'm able to earn yield off it as well. So obviously this strategy that I'm about to show you is only really effective if you're bullish on LiquidDriver. If you're bullish on the Fantom ecosystem, as we went through some fundamentals, if you think that it's undervalued like I do, then LiquidDriver gives you kind of access to that upside whilst enabling you to earn yield at the same time. And we've actually seen quite a nice response in terms of price action. It's been pretty stable. Like, look at this the past few weeks. Like, it has unlimited emissions, but at the same time, it's had some really, really strong demand coming in, and the incentives to lock are super high. So it can quell emissions through its supply side constraints through its locking function. So the price has been quite stable, and I think it has a lot of upside. I think if Fantom rallies, in a hypothetical scenario, if Fantom pushes up to say $5, I think LiquidDriver runs to around 100. That's a conceivable scenario in my opinion, just based on the current rates of growth. I mean, we saw it at 54. It's pulled back now.
So just again, let's just recap again for those people who are new. So effectively what LiquidDriver does, it goes out and it buys other governance tokens. And the reason why it buys governance tokens are actually twofold. One is because by owning governance tokens in a specific protocol, you can affect what that protocol does, the pools that protocol adopts, et cetera, and they can position it in such a way that LQDR holders get amazing returns. The second thing is governance tokens get dividends, so to speak. Not the word's not really dividends, but I guess they get a return for holding the governance tokens, which is usually based on the success of the protocol or the fees generated by the protocol. And what LQDR does is it collects those on behalf of its holders and distributes it to its holders. So it's actually, if you want to dumb it down, LQDR is actually a fund, so to speak, which holds other governance tokens. And through holding all these other governance tokens, it votes on what these other protocols can do, and it earns huge returns because it owns so many of these governance tokens. And it pays back the returns that it makes to its holders, but with a very smart mechanism that says, if you want to be a part of this return, then you got to lock up your tokens for you.
Exactly. And I guess that's the super, super awesome thing about LiquidDriver is that you have the option to earn all these different tokens, because obviously if they're buying up governance on Beets, they're able to offer more Beets. So we see you actually get paid out in 6 different tokens for staking LQDR. You get LiquidDriver, which is through their own emissions. You get LinSpirit, which they pay out through the governance on their Spirit Swap pool. You get Spooky Swap. You get Spells. So you're able to receive a basket of goods through LQDR. But as I said, there's a problem with this. You have to lock for 2 years.
You have to lock for 2 years. That's the catch. You don't earn anything if you don't lock for 2 years.
Exactly. However, there is a solution. 105% APR, you can see here. Beethoven X has now offered the ultimate solution to this. So if you go into Beethoven and you click on the invest/farm tab, you can scroll down and you will find this pool called Pirate Party. Now, it's offering a slightly lower APR than LQDR, but you're only taking a 15% hit, but you're keeping your tokens liquid. This is the best thing. So if you want exposure to LiquidDriver tokens, but you don't want to lock them up for 2 years, this is the way to do it. So you go into Pirate Party, and you can invest LiquidDriver, and it will split it into an LP, 80% LiquidDriver and 20% Fantom. Now, usually most LPs are 50-50, which means you can suffer impermanent loss because the pool is constantly rebalancing. But the good thing about this pool is that it's 80%, 20%. So you're only receiving 20% Fantom. So impermanent loss is much less of an issue in the instance that LQDR pumps. So you're basically getting effective single-sided staking here. Technically, it isn't, but it's very, very close to just holding LQDR through this pool. And that's the beauty of what Beethoven has been able to set up here. And I can just go through how to actually do this. So if you purchase LQDR, you can purchase it on Beethoven under the swap feature here. Whatever tokens you have, you can swap for LQDR. You can also buy it on Spooky Swap. Those are the best exchanges. Spirit Swap as well. So you got to use the DEX, unfortunately. There's no centralized option to buy LiquidDriver, but if you've got a MetaMask, you can purchase LiquidDriver tokens. So then you want to go into this Pirate Party pool once you've got your LiquidDriver and click Invest. And when you invest, it'll automatically allocate 80% LiquidDriver and 20% Fantom. You don't need to go and create an LP anywhere else. Beethoven will automatically create LP tokens for you. Now, you earn your APR 90% in Beets tokens. So you earn them in the Beets token. And it just so happens to be the Beets token is one of the tokens that I'm most bullish on in the Fantom ecosystem. They just released a gauge model similar to Spirit Swap. So other protocols are actually now incentivized to buy up Beets and stake Beets. LiquidDriver just entered the race. If I have the tweet up here, they actually offered bribes for the Beethoven pools. So we're seeing competition for Beets tokens as well. So you're earning Beets tokens from staking, and you get a 90% APR. So on LiquidDriver, you're receiving 105% APR, but you're locking up for 2 years. So the benefit to Beethoven is you're getting that liquid token, which you're then able to reinvest. So there's a few things you can do with this. The first thing you can do, so there's 3 ways you can play this. Number 1, you could take your rewards in Beets every day or every week, however often makes sense for your portfolio. You can come in to Spooky, put in your Beets token here, swap it for LiquidDriver, and go back into the Pirate Party pool, and then reinvest. So you're effectively compounding LiquidDriver. This scenario 1 is the best scenario for people that are bullish on the LiquidDriver token. If you believe that LiquidDriver is going to be the best performer, then why not just compound back into LiquidDriver? Because that is one of the best ways to be able to increase your LiquidDriver stack. So at 89% APR, if you actually compound this daily, you're getting 143% APY on a daily compound. On a weekly compound,
you can compound daily on Fantom. You can compound daily on Fantom because there's no gas fees. There's no gas fees. The gas fees are close to zero. So you can compound daily on Fantom.
Exactly. I mean, the most you'll pay is around 30 cents, and most of the time it'll be around 10 cents for a withdrawal on Beethoven. So just a few cents, you can come in and you can compound daily, which is really cool. And I mean, 150% APR off a daily compound is awesome, because you're stacking LiquidDriver. So instead of just keeping it in your wallet, instead of just letting it waste away, or instead of coming in here and actually having to lock it up for 2 years and you're never going to see those tokens again, pretty much, you can come in here, compound, earn your 140%, and stack LiquidDriver tokens. So that's option number 1. Option number 2 is to take advantage of LiquidDriver's farms, because LiquidDriver farms, you don't need to lock up. So you can take your Beets rewards here. You can swap them. I'll actually show you the farms first. So we talked about ICE before round. We said how we thought ICE had good potential, right? Well, look at this. ICE pool paying 84%, ICE Fantom. And what you can do is you can come take your Beets rewards every day, swap them for Fantom. So swap your Beets for Fantom. Take those Beets that are those Fantom that you just swapped from your rewards, and come into LiquidDriver and deposit that Fantom you can zap into ICE Fantom. So zapping means you can zap straight in. You don't need to create LP tokens. They'll create them for you. You click zap, then you click stake. It's as simple as that. And you can earn 83% APR.
But you could get caught with impermanent loss, which is something we should discuss on another show.
You could get caught with impermanent loss, which I'll discuss later, but you've got to weigh up the opportunity cost of actually holding the tokens, because you're receiving an 83% APR. So it would take effectively a 10x of the ICE price to offset the 83%. So I guess there's a big misconception with impermanent loss. You're not actually losing anything, right? You're just losing compared to holding. So yes, you've got to factor that in. But if you're bullish on Fantom and ICE, then it's not a bad play to stack ICE. So that's the second option. The reason I like LiquidDriver, obviously you can sell your Beets rewards for anything. You could even go cross-chain. You could deposit into any protocol, right? So why LiquidDriver? Because the rewards are some of the most competitive on Fantom, because they're doing this governance hunting approach and they're earning so much for their token holders. They're able to emit LQDR tokens and offer higher APRs across the LiquidDriver platform. So just look at this. You can pair your Fantom with a stablecoin, Fantom MIM, for 67%. Fantom USDC is paying the same. So you can come in, and if you want to play it really safe, you can go Fantom MIM and you can compound into one of these pools. So once you've got these Beets tokens from the Pirate Party pool, you're just unlocking so many opportunities in the Fantom ecosystem. And it's really, really cool to do it through LiquidDriver because the rewards are so high. They're pretty much the highest rewards on Fantom. That's why I preach LiquidDriver is one of the best places to be able to compound rewards. Obviously, and this is probably the most lucrative one in my opinion, there's option 3. This involves no swapping, and this is one of my favorite options. You've just got to be careful of the Beets price because it's pumped a lot recently. As I said, they just introduced a new gauge model, so a lot of protocols are buying up Beets, panic buying pretty much into Beets, so they don't miss out, because there were huge bribes that happened with the Beets wars, which I'll have to cover in another video in more depth because that one is super crazy. But pretty much the summary is there's a strong demand for Beets. So what can you do? Okay, deposit your LiquidDriver into Pirate Party. Cool. Get that 90% APR, receive it in Beets every single day. So you've got these Beets tokens now, and you don't even need to swap them. You can come straight into stake on Beethoven X, and you can deposit your Beets for 91% APR, and you can earn Beets. You can put in your Beets, and you can mint FBeets. Now, FBeets, so you deposit your Beets rewards for FBeets, which are the governance token of the Beethoven platform. As we know, Beethoven is now the second DEX on Fantom for volume. So it's overtaken SpiritSwap based on the data that I last saw. It's one of the best DEXs on Fantom because it's offering the cheapest rates. It's actually basically the cheapest platform to come in and swap on Fantom because of their I don't want to go too in depth, but they're a balance of forks. So they offer these kind of ETF style pools where they have multiple tokens. So they're actually able to lower the length of the swaps. So they can offer cheaper swapping for all the users. What this has meant is that a lot of people have discovered, oh, well, Beethoven's actually a cheaper place for me to stake. So why not come in to swap? So why not come in and swap on Beethoven? So what's happened is the protocol's generating a lot more revenue now than it used to. I think it's doubled its revenue in the past month.
Yes.
So they're offering this APR to hold it. So if you take these FBeets tokens, you can deposit them into the Fidelio Duetto pool. You can invest them for the BPTs. So it's 3 steps. You invest the Beets tokens, you mint FBeets, and then the third step is you deposit FBeets. 3 steps, super low gas. And once you've deposited FBeets into the FBeets farm, you're now receiving a 91% APR. So it's on the stake icon here, and you can come in and you can deposit FBeets. I'm super bullish on Beets as a token personally. With this new gauge model, I think the sky's the limit, really. It's got a pretty low market cap compared to other tokens in the ecosystem. Once again, it has pumped, and with the Bitcoin price. So I would be careful of buying Beets directly. But the beauty of yield farming is that you're not aping in. You're farming gradually over time. So by buying LQDR at pretty good levels, you're able to farm Beets tokens over a period of time that isn't too that doesn't mean you're aping in, because look at this. I mean, it's almost double. Like, it's gone up a lot. So buying Beets tokens right now,
even in a down market, that project's been amazing.
Because it's so damn strong, and it's full disclosure, like, it's one of my biggest holdings on Fantom, because I absolutely believe in this project. It is awesome. And I've
go for it.
Yeah, I've been investing in the Fidelio Duetto pool, staking my FBeets, and receiving good rewards. So if we just recap a little bit, so you're going to Pirate Party, you're depositing LiquidDriver, so you've got exposure to LiquidDriver, you're receiving your 90% APR, then you're coming in and you're receiving Beets, you're coming into stake, you're investing your Beets into the stake function of the pool, you're investing Beets, you're minting FBeets, you're depositing them, and you're receiving 90%. So you're receiving 90% on top of your 90%, which you're then compounding daily. If we actually do the maths on that, that's a few $100% a year if you're compounding it in terms of APY. So you're earning a few $100% to hold two of the most bullish tokens on Fantom. It's a pretty good deal in my opinion. So that is why I'm very, very keen on these two projects. They're two of my favorite projects in Fantom. And this strategy means you can develop exposure to both without having to ape in at super high prices. So I would keep my eye on the Bitcoin price, see what happens to the market before going too crazy, but dollar cost averaging is a safe way to get exposure. And if you're bullish on the Fantom ecosystem, this is the best way to be able to maximize your yield in the ecosystem. So that's the play. That is the play.
Love it, brother. Listen, I loved your first show. Wow, so much alpha, so much alpha. I think what we'll do from tomorrow is try to keep it a little bit shorter, not because I think it's too long. I just think that there's too much going on. There's so much alpha, and to absorb an hour worth of alpha, I mean, you got to be a rocket scientist, bro.
I'm sorry, I can't help it. I'm just bleeding alpha.
Love it, love it, love it. We'll see you guys. We'll see you again tomorrow at exactly the same time. That's 1 a.m. EST. It is 8 a.m. South African time. And it is what time in where you are in Australia?
5 p.m. AEDST, I think is our time zone. AEDT. 5 p.m.
Amazing, guys. Love you guys all. And we'll see you guys tomorrow. Until then, I guess you can stake well, my friends. That was a lot of fun.
Yeah, I got into the rhythm, calmed down, and then by the end, I think it was really good.
Fantastic. I think what we'll try and do is try to keep them to like 30 minutes. I think 30 minutes is probably the optimal length.